What is the single most common factor between these images? These cities have evolved and grown in the last few decades. And not just these cities, the entire country has seen amazing changes. But what exactly happened that led to such dramatic changes? Well, what happened is that along with various other factors, India's per capita GDP rose. And with that, most individuals started having better earning opportunities. When I'm earning better today than I was yesterday, I want to live better. I want to upgrade my lifestyle. Maybe switch cities. Maybe have other forms of investment. Maybe move into a bigger apartment. Or even construct a home for me and my family. For millions of people like me who moved cities, the cities now needed to make room for all these new residents, with housing societies, office spaces, malls, among other things. There may even be others who didn't need to relocate to be a part of this urbanization. But like everybody else, their growth in per capita income allowed them to purchase more properties or construct more, maybe to rent out, lease out, or maybe just to settle down. And hence came the real estate boom. And as of this decade, it's still on the rise. But if real estate is still growing, there should be investment opportunities too. So, for you as an individual, what are your options? Let's find out. Hi, I'm Kishan, and welcome to our channel Brick and Board, where we will be sharing all insider information about your dream constructions. Today, I will share some crucial information about real estate investment that would help you make better decisions. If I want to invest in a property with the intent of human habitation, for example, single family homes, apartments, townhouses, etc., well, such investments come under residential investments. Whereas any property that has been invested on purely for business rental purposes, for example, office buildings, retail spaces, warehouses, and industrial properties, well, these come under commercial investments. So, let's get a deeper understanding of these two broad categories, residential and commercial investments. Let's use the analogy of fixed deposits versus stocks and look at aspects such as market knowledge, risk and returns, liquidity, and maintenance. Right, so let's start with market knowledge. Residential investment is like fixed deposit, simple and straightforward. You, I, or anybody can do it without any special skills, making it a popular choice. Commercial investments, on the other hand, are like the stock market. They are complex. Not only should I have a deeper understanding of market dynamics, trends, but also I need to have the strategic insights in order to maximize my returns. Therefore, making it better suited for experienced investors who can navigate the risks and capitalize on opportunities. Now let's talk about risk and returns. Residential investment is like a fixed deposit, a safer bet with steady, stable, and predictable returns. I won't see sudden spikes or dips in my earnings, plus it's less likely to be impacted by economic fluctuations. Commercial investments, on the other hand, well, they're like stocks. It's more susceptible to economic fluctuations. During good phases, I can earn substantial amounts, but during not so good phases, my earnings can dip by a huge margin, making it risky, unstable, and unpredictable. Now we can talk about liquidity. Residential investment, like fixed deposits, they are accessible and easy to liquidate in times of needs. With high demand, especially in stable markets, I can easily sell my residential investments, allowing me to expect a predictable selling price. On the other hand, commercial investments, like stocks, offer less liquidity. Similar to stocks, where selling can take longer, the demand for commercial investments fluctuates with market conditions. During economic downturns or uncertain times, I may find it really challenging to find the right buyer, making the waiting period longer and potentially even lowering the selling price. Last but not the least, let's come to maintenance. Residential investments, much like a fixed deposit, are a fit it and forget it kind of strategy. Once I've invested, I may handle repairs, tenants occasionally, but it doesn't require my daily active participation. Quite similar to depositing money in a fixed deposit and simply watching it grow over time. Super low maintenance, hassle free, and steady. Commercial investments and stocks are alike when it comes to involvement, management, and maintenance. Just as I have to monitor trends and company performances with stocks, I also have to stay up to date with market conditions, tenant needs in commercial investments to optimize my returns. Regular maintenance and strategic decisions are vital in both to stay competitive and achieve my financial goals, making active involvement not just important but critical. See, because residential investment is more personal, it's easier to manage, has lower initial costs, and has steady, modest returns, the percentage share of individuals investing in residential properties is much higher than on commercial properties. However, with commercial investments, greater risks and complexities, they come with greater profits. Well, that's all for today. If you are weighing your options between these investments, I hope this video helped. If you like the video, don't forget to leave a like and share it with everybody that you think would benefit from this. And if you have any special requests, let us know in the comments below. See you next time.